Sellers are disappearing from the GTA market, not slowly, not gradually, sharply and deliberately, and almost nobody is talking about what that actually means. New listings across the GTA dropped 18.9% year over year in May. That is not a rounding error. That is nearly 1 in 5 sellers choosing to stay home, literally. And here is the part that matters for you right now. Buyers are showing up in larger numbers than last year. Sales rose 6.3% year over year in May 2026. More buyers, fewer homes. That equation only goes one way. So today we are breaking down exactly what is driving this seller retreat. We are going to look at the data behind it. We are going to look at which GTA cities are feeling this hardest. And we are going to talk about what buyers and investors should actually do. Because the window to move in this market is not permanent, and the people who understand what is happening right now will be glad they paid attention. Let us start with what the numbers are actually telling us. The May 2026 TRREB report was genuinely surprising in places. Everyone expected a mild seasonal pickup in spring activity. What happened instead was something more significant. Sales hit 6,583 transactions in May. That is up 10.7% from April alone. Seasonally adjusted, that is still a 10% monthly jump. That means this was not just normal spring behavior. Real demand came back stronger than analysts expected. Now here is where it gets interesting. While buyers returned, sellers moved in the opposite direction. New listings fell 2.1% month over month on a seasonally adjusted basis. Year over year, new listings were down 18.9%. Active listings across the GTA sat at 26,927 in May. That sounds like a lot until you realize it is 13% below May 2025. The sales to new listings ratio climbed to 37.2%. In April, it was 34.8%. A year ago, it was 28.6%. That ratio is tightening fast. The market is not balanced anymore. It is shifting. And honestly, this surprised me when I looked at the data more carefully. Prices are still down year over year. The benchmark price is 6.7% below May 2025 at $946,500. Average sold price is down 4.6% year over year to $1,069,700. But month over month prices are stabilizing. The average rose 1.7% from April to May. The median rose 3.4% in the same period. So prices are falling in the headline number, but quietly recovering underneath. That is a very different story than most people are reading. Now, the obvious question is, why are sellers pulling back so hard? There are a few things happening at once here. First, many homeowners who bought in 2020 and 2021 are still underwater. They bought near peak pricing. Selling today means accepting a loss or a significantly reduced gain. Most people are not willing to do that voluntarily. Second, reverse mortgages are quietly becoming more common. Older homeowners who might have downsized a few years ago are now choosing to stay. They are accessing equity without selling. That removes a meaningful source of resale inventory from the market. Third, the emotional math of selling right now does not add up for many people. You sell your home at a lower price than hoped. You then have to buy in the same market. Many homeowners look at that calculation and simply wait. And waiting means listings stay off the market longer. TRREB. President Daniel Steinfeld said it directly. If market conditions continue to tighten, it could signal opportunity for buyers on the sidelines. That is measured professional language. What it is describing is a market that is quietly running low on supply. And before I continue, if you are finding this useful, hit subscribe so you never miss a GTA market update. Now back to what we were talking about. So what does a supply squeeze actually mean for buyers this summer? If you are a first-time buyer right now, here is the reality. You still have negotiating power in many segments. Prices are still below last year across every property type. Detached homes are down 4.7% year over year to $1.36 million. Semi-detached homes are down 2.8% to $1.07 million. Condos are down 6.4% to $639,000. But the conditions that created that negotiating power are changing. Every month that inventory tightens, that leverage shrinks. And right now, inventory is tightening faster than most buyers realize. Homes in Ajax are selling in just 18 days on average. Pickering is at 22 days. East Gwillimbury is at 23 days. Halton Hills is at 24 days. These are not slow markets waiting around for offers. These are communities where prepared buyers need to move quickly. Even Toronto itself is averaging just 25 days on market. Same for Mississauga, Markham, Vaughan, and Brampton. That is not a buyer's market that lasts forever. Now let us talk about specific areas where the supply story hits differently. In Markham, prices are down 4.8% year over year. Demand for detached homes in established Markham neighborhoods has stayed relatively steady. The combination of lower prices and tightening supply is creating real competition quietly. In Oakville and Burlington, days on market are stretching slightly longer. Oakville is at 28 days, but premium detached inventory has been absorbing faster than the headline numbers suggest. Families upgrading from Toronto and Mississauga are watching these markets closely. In the east end of the GTA, Ajax and Pickering are standouts. These communities offer more accessible price points than many West End equivalents. And they are moving fast. 18 and 22 days on market is genuinely competitive. Investors and first-time buyers looking for value should be watching Durham region very carefully. Now here is what most buyers get completely wrong about a tightening supply market. They assume prices have to drop more before they move. They are waiting for a cleaner bottom. But the data tells a different story. When supply falls and demand rises simultaneously, the floor is already forming. Prices do not wait for buyers to feel comfortable. They respond to the conditions that are building right now. The month-over-month price recovery we saw from April to May is a signal. It is not confirmation. It is not a guarantee, but it is worth paying attention to. Current market data suggests the GTA is no longer searching for a bottom. Analysts are observing a transition from a declining market to an early recovery phase. That transition does not announce itself loudly. It shows up quietly in rising sales-to-listing ratios and shrinking inventory. Exactly what we are seeing right now. For investors, the picture is worth examining separately. With new listings down nearly 19%, resale competition for income properties is changing. Well-priced, detached, and semi-detached properties in Ajax, Pickering, and Newmarket are attracting multiple uses. Primary residence buyers and investors are chasing the same limited pool of homes. Rental demand remains elevated across the GTA. Rents have pulled back from peak levels, but purpose-built rental inventory is still years away from meeting demand. Investors who find well-priced income properties in this window have historically benefited. Current market trends indicate that window is narrowing. The bottom line here is straightforward. Sellers are not showing up. Buyers are. That imbalance is building pressure beneath the surface. And the cities feeling it first are the ones with already thin inventory and strong demand. Ajax, Pickering, East Gwillimbury, Halton Hills, Markham, Newmarket. These are the communities where the supply story is most visible right now. And the buyers who understand the inventory math are moving while others are still waiting. That is what the numbers are showing right now. What you do with that information is up to you. Chapters. 0 o'clock hook. Sellers are vanishing from the GTA 045. What the May 2026. Numbers actually show 2 o'clock. Why homeowners are refusing to list right now. 4 o'clock. How a supply squeeze affects buyers this summer. 6 o'clock. Which GTA cities are feeling. This the most 8 o'clock final thoughts. What to do with this information.